Yeah, so up until today, we had 3 rate hikes next year, but we kind of rethought that. We looked at our CPI and forecast, and because of the price of oil, we brought that down. And it just seems like, the Fed is at a point right now where it can really kind of feel its way along. It doesn't have to be on this preset path of, of hiking rates. And so, we'll think you'll see slower rate hikes next year, and we think by the middle of next year, they'll pretty much be done at that point.
So just to be clear, you're thinking only 2, though, for 2019?
For 2019, right? I think the one next week is pretty much a done deal at this point, and then it's we're looking for 2 next year.
What's the chance it's less?
Well, I think it depends on. It really is going to depend on the growth outlook here. If growth comes in as we expect, and so for overall 2019, we're still looking at like a 2.5% in real terms. But if it actually slows down more than that, I mean, you could potentially see 1 and potentially 0. But I think it really is going to depend on.
But is 1 or 0 a bullish sign, or is 1 or 0 a bearish sign? Because if they're not raising, it means that they have the same anxieties and worries that the rest of the economy and market does.
Yeah, I would say 1 or 0 is probably is a bearish sign. It's showing that the economy is slowing more than what people had expected, and that's obviously going to weigh on growth in corporate profits if it's that sort of slow.
So for equity owners and investors, your expectation in terms of where the S&P and Dow will end 2019?
Well, so we ourselves don't have a forecast on that, but we do believe that profit growth is going to slow. So I mean, if you're looking at before tax profits, and this would be all economic profits in the entire economy, it's going to grow about 8% this year, and we're looking for about 5% growth next year. Now, whether or not that's factored into the market or not, I'm not going to opine on that because I'm not a stock market strategist. But we are certainly looking for slower growth in profits in 2019, and then about flat growth in profits in 2020.
Is there any particular area or sector you think actually will outperform in a meaningful way?
Well, I think, the capital spending has the potential to outperform as we go forward. One of the things that we haven't seen at this point is a real acceleration in capital spending because of the tax reform. That potentially could happen as you go forward. And when you look at consumer spending, that was supercharged earlier this year because, in fact, of the tax cuts. And that's probably going to slow as well. So if there's something that's going to really outperform as go forward, I think it would probably be in the capital spending side.
And if there's one area that you're particularly nervous about?
There's one area I'm particularly nervous about, and nervous is a strong word, so I don't know if I would necessarily, use that word. But one area of what we'll be watching is, so the labor market, as we all know, is really tight right now. And so what happens if wages really start to accelerate as we go through 2019, and that really starts to put some upward pressure on prices? Instead of talking only 2 rate hikes next year, let's talk about what happens if they actually start to go 4. Because inflation really starts to pick up. So I think when I look at the economy right now, if I'm looking at an imbalance or an excess, if you will, in the economy, I think it's the tightness of the labor market and potentially what that could mean for wage acceleration going forward.